A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 11. I'm Ritvika Gupta and here's wishing all our viewers a very happy new year. On the show today, we'll be bringing you highlights from our recently concluded Mumbai Springboard. In the first segment, Bhavesh Jatania, Head Startup Banking, IDFC First Bank, will be delivering a keynote on Mumbai's startup ecosystem. And in the second segment, my colleague Pooja Jain will be in conversation with Rahul Singh, Country Head Private Banking, IDFC First Bank, and Harshvardhan Rungta, CEO Rungta Securities.
Mumbai, known for its vibrant financial ecosystem and burgeoning infrastructure, stands as the epitome of India's economic progress. Today, the city stands as a gateway to infinite opportunities, forging a transformative future for the country.
एक अधूरी कहानी, right? अधूरी कहानी because it's an ongoing process, right? Don't worry, it's only 7 slides, so I'm not going to take a lot of your time, right? So I wanted to call that out quickly first. What's Mumbai? Let's look at Mumbai in terms of numbers. Some 6% odd in terms of GDP, share of GDP, some 30% share of income tax collections, right? And Mumbai is bustling in terms of activities, right? Mumbai is one of the most happening places. One of the most happening places or the most happening places, so to speak, right? When we speak about Mumbai, we all look at numbers and say Mumbai is great economic capital by large distance, right? But is Mumbai all about numbers? Is Mumbai all about business, right? Mumbai is an emotion, right? As maybe Mr. Khan would put it, dil mein aata hai, samajh mein nahi aata, correct? So that's what we would say about Mumbai, but I'm sure you agree with that. Okay? So what makes Mumbai what it is today? What makes Mumbai? Mumbai ka King Kong are these large corporates, right? Business houses, and lots of business houses are actually headquartered here in Mumbai. Banking and financial services, a large part of Mumbai's business, right? We're talking about stock markets housed here, yeah. We're talking about regulators housed here, right? So is Mumbai all about these large businesses, banking and financial services, or for that matter, entertainment industry, right? Which is again headquartered here, if you were to look at the Bollywood, right? Or the Hindi entertainment industry, so to speak, right? But is this about all of these, or is this about the people of Mumbai, right? The common man of Mumbai that we're talking about, right? The common man of Mumbai, the spirit of Mumbai, right? Lage raho munna bhai. So continue, never give up, right? Continue to do what you're doing, right? And you'll be at it and you'll get there, right? So that's the spirit of Mumbai. So, all right, all good things about Mumbai, but today Mumbai is what it is. Who knows about tomorrow? We're talking about new age businesses. We're talking about startups, right? When you look at startup numbers, right? The new age businesses, where are they headed? Are they still in Mumbai? Mumbai is third largest by a long distance. If you were to look at in terms of number of startups, if you were to look at in terms of the valuations of startups, the unicorns, right? By a long distance. So as Jakku Dada would possibly say, right? Is dharti khisak rahi hai bado, right? So that's how it is, right? There's a tectonic shift which is happening in the business landscape as we see it, and large part of the businesses, or should I say, new age businesses are moving out of Bombay. They are not getting incubated in Bombay. They are not starting in Bombay. We are riding a technology wave today, and technology is transforming everything as we see it today, including banking. Banking used to be about branches, about people, about real estate, about humans that you dealt with. Not anymore. 65% more than 65% amongst private sector banks, but overall, if I were to look at, more than 65% of banking transactions actually take place outside of the bank on the digital platform. So customers are today the way they essentially deal with the bank is through technology. The experience that they get is essentially experience with the technology, the mobile platform that you have, the web platform that you have, and multiple such payment platforms that you have today, right? The customers are interacting with technology more than humans and real estate, right? And which is why banking is all about technology today. And we hear this very often that banking and technology spaces is actually converging. We see this globally, right? We see this large e-commerce platforms getting into payments business, right? Why would they do that, right? And we see the vice versa also. We see banks essentially starting supermarkets, so to speak, right? Trying to get a hold of the customers today. So that's a change. That's the change that we see in the banking space today, right? And that's going to remain. That's only going to accentuate from here on, right? As we see it, it's a new age young bank that we're talking about. It's the flag bearer of the change that we're talking about. The change that is happening today in the marketplace, IDFC First Bank is actually leading that change. I'll give you a couple of examples to explain my point here, right? When we're talking about simple things as savings account, right? And some of these is right on your chart here, right? Savings account. On savings account, God knows for how many years, right? All the banks continue to pay interest on a quarterly basis. And nobody asks why. Why? When we got into it, we asked why. Because we are an EMI bank, so to speak, right? IDFC Bank is a retail bank which essentially offers loans to customers and seeks interest on installment payment from them on a monthly basis. So we said it's a question of equity there. If we are asking for money from you on a monthly basis, we should also be paying you on a monthly basis. Understanding the household requirements of a common man, right? Every penny adds to his household budget. Every penny helps him in managing his household budget. So what we did, we changed the quarterly interest payment to monthly interest payment. What does that mean? That means you get a little more. Obviously, apart from the interest rates, on a compounding basis, you get a little more. And we also have to essentially set our operations for that, right? So we have to schedule payments on a monthly basis, which is very operations heavy. But we said it's a question of equity. So we should do it, right? And that's what we did. And I'll come to the next product, and all of you in this room, I'm sure, use that product, which is a credit card. And we call it a credit card. Ask yourselves, in India, is credit card actually a credit card? Anybody who thinks credit card is not a credit card actually in India? Any of you? No? Nobody? Have you used credit on credit card at any point in time? Have you used credit on credit card? Have you just revolved your balance at the end of the month? Revolved, mind you, your balance at the end of the month. What is a credit card supposed to do? A credit card is supposed to essentially give you a month's time to do your transactions on a plastic that it offers, right? And at the end of the month, it will give you a statement you're supposed to pay. And if you don't want to pay, or if you are not in a position to pay, you can always take credit by paying a minimum amount. That's called revolve. Do you know in India, when you do that, the kind of interest rate that's charged to you? Any of you?
48%.
Fantastic. You said it, sir. But yes, it is not a credit card. When we looked at the space and said, so how can we make a difference? We can make a difference by linking the credit card revolve, right, to your CIBIL score. It's a personal loan at best for you, right? So you should be charged interest rate, whatever you get from a personal loan. I'll give you one more example, and so that you understand, all of you are essentially business people here, right? From a business account perspective, obviously there's a regulatory requirement that you cannot earn interest on your idle money on a business account, right? On a current account, you can't earn money. So when we looked at this, we said on a business account, on a current account, right? You can always define the need, right? And if you can define the need, your idle funds can be identified. If your idle funds can be identified, we can sweep this into a fixed deposit account, and for every idle fund, you will end up getting interest on your current account, right? Now, this is again another product, which is a simple product to essentially roll out, and some of the banks actually did for a while, right? But when they rolled out this product, they keep it in their drawer and not in their backpack. So which means that unless you ask for it, they don't offer it to you, right? We actually carry it in our backpack, in our hand, right? Because we understand your need. We understand that emerging corporates or emerging enterprises, right, emerging businesses obviously cannot afford to employ a treasury manager to ensure that every penny in their account makes sense to them, makes money for them. And which is why this is essentially a treasury management for you. Our account essentially does a treasury management service for you, right? That's what we did. And we participate as a bank in every possible innovation that comes in India, including the ONDC that we're talking about, the digital commerce, that the platform that the government has launched, right? Including the digital rupee initiative, which has been rolled out by RBI, and many such innovations. This is just a trailer. Thanks for being patient and going through the presentation. Happy to take any questions that you have, right?
It's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back. You're watching IDFC First Bank Presents Leaders of Tomorrow Season 11. We're bringing you our highlights from the recently concluded Mumbai Springboard. And this is our Well First segment. Listen in.
So Rahul, if I could kick off the conversation with you. You know, whether justified or unjustified, India has long been branded as a country of savers, not a nation of investors. My question to you, is this perception fair? Is it accurate? Or is it long outdated? Your take, sir.
Numbers still suggest that we have a long way to go, but in the last 4 or 5 years, it's definitely changing now. Almost 2/3 of the money which people save in India go to your traditional liquid assets, which is cash, bank fixed deposits, or savings accounts. About 23% goes to physical assets like gold and real estate. And then only 12% goes to really what we call in financial terms as investment options, which gives you better returns than inflation. But that number is changing in the last 4 or 5 years. If you see, I was reading recently, we have touched 17,000 crores of systematic investment plans into equity mutual funds,
Right.
which was hardly 3,000 or 4,000 crores 5-6 years back. So we have made tremendous progress, but we have a long way to go in that journey.
Well, absolutely. And, you know, Rahul, if we do have a long way to go, I want to build on some of your observations and come to you now, Harsh. Because we harbor these lofty goals of widespread financial inclusion. And yet the reality is that there's a lot of hitchkichahat or inbuilt hesitation when it comes to discussing matters of money, even within the close confines of one's family and circle of friends. So what's the solution? How do we navigate, that clutter?
Pooja, you've asked a very sensitive question, I may say, because we're talking about a situation where you're going to talk. Indians do hesitate to discuss money within the families. Leave aside inheritance. So the moment you go up and walk to your elders and you tell them that will banaya kya,
Gee.
you know what kind of response you're going to get, right?
Bilkul.
So yes, it is true that we are hesitant to talk about personal finance issues, because if the lady of the house goes and says, what are your investments, to the men of the house, they would say, why are you getting involved?
Right.
Right? So these are real issues on the ground level. But the fact is that you need to talk about money with your family. You need to talk about inheritance. Okay, you need to talk about, why only talk about investing? Let's talk about even inheritance, which is an even more sensitive topic.
Please.
Okay, now, many individuals even today believe that there is not going to be any disputes. I have just one child. Why do I need to make a will? Well, that's not true. You make a will for two reasons. One is to ensure that there is a smooth transition of assets that you build all your life to the next generation. When I say smooth, does not mean there has to be some dispute in the family. There are legal issues that you need to take care of. So if you're owning real estate, okay, then there is a reason why you need to have a will, get it probated, and then possibly the transfer will happen.
Absolutely.
Okay. The other reason that you will make is because you don't want disputes, right? So disputes is the second reason that you would possibly be considering, but the first one has to be.
You're absolutely right. And these everyday examples truly help set the context. And, speaking of everyday examples, Rahul, we're in a room full of entrepreneurs, and many of them face incredibly complex financial decision-making scenarios on a daily basis. Oftentimes, you see an entrepreneur struggling between sort of blurring the lines when it comes to personal cash flow and corporate cash flow. How does this make for a dangerous precedent? And what's the solution essentially?
So we've seen this in India. We have not only when you're starting a business, there is always going to be the funds are always very difficult, and you have to you are running on a shoestring budget. But I have seen in my with my clients, even if they scale up, the business becomes large. Still, they don't separate business risk with personal wealth. Most of the families, they tend to club these two, and because they have illusion of control, they feel that since I'm running the business, there's nothing which can go wrong. Globally, most business families, once they reach a certain size, they separate personal wealth and business risk by moving personal assets or family assets into a trust, and that is managed separately. They carve out certain amount of money every year and move that so that the family doesn't suffer in case, God forbid, something happens to your business. But India, that is slowly coming in, but I think it's still, we have a long way to go.
It's coming to you, Harsh. Earlier in the conversation, Rahul mentioned gold, you mentioned real estate, and gold and real estate have long been considered to be safe havens, right? Particularly in this country. And, in light of the recent volatility, while gold has surged, real estate has sort of dugmuggled, so to speak. I'd love your take on what's the rational course of behavior with these two asset classes in the current environment.
Pooja, investors, why investors? We all tend to lean towards comfort. Okay?
Absolutely.
So anything that we are familiar with, we tend to naturally lean towards that and find that as to be a comfort area. So gold, real estate, traditionally, historically, has been simple products to understand. Okay. So anything which is complex, anything which is something which is new, and I am not able to comprehend, I will naturally stay away from it. And that's the correct way. Our DNA has been structured that way. Imagine the first person on Earth, the first human being on Earth sees a lion and says, "Wow," and goes towards that lion. I mean, it'll be just swallowed and we'll be done with, right?
Right.
So we are inbuilt that anything unfamiliar, we are supposed to be, careful and stay away. That's what keeps us alive, right? Otherwise, we'd be dead by now. Now, the difference between our comfort and discomfort is knowledge. Okay, we just need to upgrade our knowledge to that point wherein we understand the risk associated and then we go towards it. So if you ask me honestly, if you look at the history of gold, if I take from 1975 to 2023, which is about 48 years,
right?
I mean, in dollar terms, gold has given a return of 5% annualized. So that's how gold is growing in dollar terms. In INR terms, we've got about 10.4% in the same period. So is gold giving you 10.5% return? No.
Not quite.
So gold is giving you a return in absolute terms of 5% annualized, and that the forex, the rupee depreciating, giving you another 5.5%. Okay. And we believe that gold is doing great. No, that's not the case. Okay. Now, in terms of wealth creation, you have to ask yourself, if I really want to create wealth. So my objective is what? Why am I saving today, saying that I am sacrificing the use of this money today so that I can use it in future? That is what my objective is.
Absolutely.
So I'm saying I'm not going to use it today and I'm going to use it in future. It is important to understand whether what I could buy with that money today, does it retain its purchasing power 10, 20 years down the line? If it does not retain its purchasing power 10, 20 years down the line, then I might as well spend that money today. So if I'm investing in assets which are not growing or beating inflation by a great margin, I'm actually not making any sense in investing. I rather use that money today, spend it on my wife and make her feel happy. That will give me better returns.
My last question to both of our panelists, and I'll start with you, Harsh. We are 10 days away from a new calendar year, right? 2024 is upon us. And as working professionals, so many of us are considering giving ourselves a financial makeover of sorts. So what are some expert money moves to make in 2024, sir?
So it's actually very simple. There is nothing new that you need to do. Stick to the basics. Keep it simple. I mean, there's no better formula than keep things simple. Okay. So one is, of course, realize and respect the money that you're earning. Okay. It doesn't come free. So stop giving it to your relatives because somebody's become an insurance agent somewhere and your mama's son wants to be obliged. He or she hasn't worked in enabling you earn that money. So stop obliging people with your money. And I don't think you're being rude. So resolution 2024, one is that respect the hard work that you have put to earn that money. So stop giving it away free of charge.
All of you in the room, ladies and gentlemen, please give yourselves a round of applause.
Okay, the second thing you need to be careful about is since you worked so hard at earning that money, okay, why would you invest in something which you don't understand and which doesn't make logical sense? Cryptocurrencies. I mean, I don't understand what is the basis of cryptocurrencies. I mean, those people who claim themselves to be experts, I try to sit down with them and try and understand as to what this is. And trust me, nobody knows who even founded it. So I don't know what is the product. So please respect your money. You work very hard for this. You make a lot of sacrifices. Not only your family makes those sacrifices to earn that money.
Inspiring words, ladies and gentlemen. And with that, Rahul, I'll give you the last word.
Okay, thank you. Just so most of the advice in the advice is very simple, and I'll try to correlate with whatever you asked with the health advice. But it's when I say simple, it is not easy to follow. So in health, we have three things we do. Most of us don't do it, but if it's three things we do, we will all be healthy. So one is sleep 8 hours a day, move a lot, and eat real food, but not much. Okay, but unfortunately, most of us don't do it. Similarly, in investments, you have three things which you should do. One is asset allocation, essentially buy different products. Then, so that will take care of the first rule. The second is buy good products, which is, I think, Mr. Rungt also highlighted that you don't be under pressure, but buy something which good products and they should behave differently to each other. And the third is give them time. Don't expect them to work for you overnight, So that these three things are simple but not easy to follow, because when I see every day my portfolio, you tend to get worried. But largely these are the three things: asset allocation, buying good products, and giving them time.
Mr. Singh, Mr. Rungta, the way the both of you have just humanized this conversation around matters of money, I believe it deserves a huge round of applause, ladies and gentlemen.
Thank you.
With that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 11. We hope you enjoyed the episode. Thank you for watching. Goodbye.